JP Morgan issuing that key research about oil heading for, say, $30 a barrel. What do you make of that?
Well, I mean, I suppose with the bank research, they're always they've got an agenda and they want to make sales and say kind of like shocking things. Like back in like recent years, they were big proponents of like oil could go to like 300, 400. As maybe you read it with more detail than me, but as I understand it, they were saying, if with current kind of demand levels, if supply isn't cut, then oil could be heading for $30 a barrel by 2027. That's what they said.
That's pretty much broadly the summary. Yeah, they're saying demand is growing about 1 million barrels, somewhere roughly 1 million barrels a day, so 105 million barrels a day. And actually, when I first started the industry, it was about 73 million barrels a day. So that's a while ago. So it's grown a huge amount, right? And it still seems to be growing. The only year it's really fallen is 2020. But the key thing is that demand is growing, but supply is outpacing demand, according to JP Morgan. So Keynesian model, supply and demand dynamics, price should go down. And yes, you're right. They're really saying, if we really look at this, earlier this year, they were saying maybe we're going to go to 127 on the back of the Middle East conflict and the bombing campaign back in May. And they did caveat that research if it continued. So yes, you're right. Banks can flip-flop around as the market changes. But actually, if we look at the trend, it is very weak for crude. It has been downwards. Does it get to 30? I think I'll probably grow my hair back if it does.